In this video, I'm going to give you the blueprint to making money in trading in 2024. We have a lot of opportunity nowadays that we did not see 10 years ago. I'm going to do my best at explaining to you how we can take advantage of these opportunities and make money in 2024 moving forward. So if we take a look at my screen, you can see that the first thing I want to talk about is exploiting prop firms. Now, I am a futures trader. I recommend all my students and everybody else to trade futures over forex. That is exactly why the prop firms listed in this video are only futures prop firms. Futures firms are simply a lot more scalable than forex firms, and it's way easier to take advantage of this opportunity. So we have three main futures prop firms. The first one is going to be Apex. Now, as you can see, I put most scalable prop firm under Apex simply because Apex allows a total of 20 funded accounts. Most people are going to go for the 50K account option on Apex simply because that is what makes the most sense in terms of the profit target and the max drawdown. That means that with Apex, if you are using 50K accounts, the max allocation is 1 million in funding. The next one is going to be TopStep, arguably the most reputable prop firm, at least in the futures industry, and you will not have any trouble whatsoever with TopStep, at least not in my experience. The last one, as you can see, is going to be My Funded Futures. Now, I personally have very little experience with these guys. However, they have a no activation fee policy. So while at first glance, these prop firm accounts that they are selling may appear more expensive, a 50K account with My Funded Futures is going to be $80. Looking at Apex, when they have a sale going on, which they do most of the time, you can get a 50K account for about $35. But Apex has an activation fee. That means that once you pass the evaluation accounts, you need to purchase what they call an activation fee in order to receive your funded account. Now, Apex gives you two options with this activation fee. You can pay a one-time fee of $160, or you can pay monthly, and I think the monthly is $100. So if you pass an Apex account, and let's just say you got a 50K for $30, and you buy the lifetime activation fee of $160, that means you're spending a total of $190 on a 50K account. However, even though you pay more for the initial evaluation account with My Funded Futures, if you end up passing the account, you instantly get your funded account without purchasing an activation fee. That means that a fully funded My Funded Futures account will only cost you $80. In Apex, even though they seem more cheap, it's going to cost you around $190. So for scalability and having the opportunity to make the absolute most amount of money, I would always go with Apex simply because they allow you to trade with 20 accounts. Again, this is totally up to you. I personally use Apex. I haven't had any problems with them at all, but any of these three prop firms will do. With the crypto bull run being right around the corner, we've decided to partner up with the best crypto futures trading exchange, Blofin. Because of our partnership, I am able to offer all of you a welcome bonus of up to $10,000. Not only that, but Blofin allows their users to withdraw up to $20,000 worth of USDT daily. You'll be joining over 100 million users who also use Blofin on a daily basis. You'll get access to 24/7 support, copy trading, and a whole lot more. If the $10,000 welcome bonus and everything else that I listed sounds of any interest to you, then check out our bio. And without further ado, let's get straight back to the video. Now let's take a look at the risk management part. This is my personal approach to every single funded account that I purchase. I treat my evaluation accounts very differently than my live funded accounts. When I am trading an evaluation account, I want to get it over with as fast as possible so that I am not wasting time. I do that by risking 1%. That is because I can afford to buy a new account if that one blows up. If you are a person who has never passed a funded account before and you do not have the money to keep buying new evaluation accounts, I would use the same risk as I do on my live funded account, which you can see is 0.3%. But if you are a person who has passed your funded account before and you have the money to buy a new one, if it goes wrong, I would always recommend going high risk on evaluation accounts to get it over with as fast as possible. We do not want to spend 5 months on any evaluation accounts. That's simply too long, and time is money. Again, on my live funded account, I will risk 0.3% of the total account balance, and there's a very specific reason for this that I am going to go into in the next slide. One trade per trading day with consistent risk approach. When I say consistent risk approach, I mean that you are risking the same on every single position, no matter what it looks like. So a lot of people will say, okay, today's lower probability, I'm going to lower my risk. Or today's higher probability, I'm going to higher my risk. That is fine for some traders, especially those who are on a personal account, but that is not what I would recommend a lot of you guys. The simple answer to this is, let's say you have a day that you think is low probability and you end up being completely de-risked. Somehow you end up winning all your positions that day, and the next day you see that as a high probability day, so you increase your risk. That day you end up losing all your trades. This means that your large winning day was not even close to being as large as your largest losing day. That is what we're trying to eliminate here by only trading once per day and risking the same amount on every single position. Now, going over to the risk to reward system that I personally use on my funded accounts. This is a bit of a hot take, but my preferred risk to reward when I'm trading prop firms is a 1-to-1 R, and I believe a lot more people would be successful with prop firms if they approach their evaluation accounts or their live funded accounts with this risk to reward system. Now, the reason for this is because we have trailing drawdown. Some firms have unrealized trailing drawdown. We are going to try and avoid that as much as possible by having the highest win rate trading system that we could possibly have. Now, how do we get that? We don't get that by going for a 1-to-10 R trade or a 1-to-6 R trade. We get that by lowering our risk to reward as much as possible. Again, the lower risk to reward, the higher the win rate. The higher risk to reward, the lower the win rate. That's simply how it goes. So while a 1-to-1 risk to reward may not look fancy and it may not get everyone's attention on Twitter or Instagram, that is exactly what I would recommend to the majority of prop firm traders out there, especially those who are struggling. Again, I would go for a maximum risk to reward of a 1-to-2. I would simply not go above that. You can if you want to, but the easiest way to get around the trailing drawdown and get around the unrealized trailing drawdown is to have the highest strike rate possible. And you simply have the highest strike rate possible when you have a lower risk to reward. Again, if you are using a 1-to-1 risk to reward system and you have a win rate above 50%, you are going to be profitable. If I asked you, hey, this week you were only going to trade the highest of the highest probability setups, you were going to use a 1-to-1 risk to reward, do you think you could have above a 50% win rate during that trading your current trading system? The majority of you guys probably answered yes. So then my question to you is, why are you not using a 1-to-1 risk to reward with the highest probability setups only? That's where discipline comes into play, and that's a story for another day. But 1-to-1 risk to reward is again going to be what I would recommend to the majority of prop firm traders. Now here in the last slide, and probably the most important one, we are going to talk about compounding, and more specifically, the art of base hits. Now base hits are small, consistent wins. Our entire goal is to compound, right? Building up max allocation with the prop firms and aiming for small consistent wins. So let's say you have max allocation with Apex. That is 20 accounts, whether that's 50K accounts, 100K accounts, 200K accounts, that does not really matter. It's 20 accounts. That means that every $100 you make, you technically make $2,000 because you are copy trading those $100 throughout those 20 accounts. That is exactly what I mean by base hits. The majority of you guys, if I were to ask you, do you think you can make $100 a day trading? The majority of you are probably saying yes, but $100 does not seem like a lot. That is, of course, until you spread it out across 20 accounts. That means that those $100 are $2,000. And that is exactly what I want you to understand about base hits. Do not try to go for $500 trades or $1,000 trades or $2,000 trades. We just want small base hits consistently. Again, the most important part about this industry is going to be consistency. That is going to be way better than sometimes getting these big, large winning days. That right there was my blueprint to making money through prop firms in 2024. A lot of people may disagree. This is how I've made the majority of my money through prop firms. I've also seen a lot of other people do sort of the same, utilizing the same concepts, because they understand exactly how prop firms are making money off of you guys. Again, prop firms win because people are greedy, impatient, uninformed, and lack discipline. So when you put it like that, it becomes real clear what you have to do. You simply have to avoid doing the things that the majority of other traders are doing, and then in the end, you end up making money. And this system right here is my best way to do it. Thank you a lot for watching this video. I hope it helped you out and maybe gave you another idea of how to approach these funded accounts. So without further ado, thank you a lot for watching, and I'll see you in the next video.